Okay, we should be good to go. Good evening. Or not, depending on your time zone, of course. Let me know if you can hear me, see my screen, and then we'll get into it. How are we doing? Paul, Richard, Flary, Papa Dad, MK. Very good, very good. Sounds like all is as it should be. How's your weekend? Anything special of note? Or just glued to the charts? I know what mine was like. Thank you, Jackie. Yeah, it was good. It was good. Happy Monday. Happy Monday. Hi from Mexico. Adrian. Right. Okay, cool. Let's talk about stuff. First things first, of course, thank you to Bybit for sponsoring Technical Roundup and supporting the live streams as well as the newsletter. If you'd like to support the channel, be sure to check out their links in the description below. This week's actually quite interesting. It's an update. You know, I just tell you how it is. If I think something's meh, I'll tell you. But if I think something's interesting, you'll also hear the other side of it. I used to be a big mobile trading bear, because it just seemed sort of lazy, and the infrastructure and supporting tools for it weren't all that great. That's been changing in the last year or so, and competition in the kind of, I suppose, mobile trading sphere has gone up as well. So, you know, Bybit app is good, and some recent additions. Custom widgets, which a lot of people are asking for. This is pretty helpful. Price spikes and plunges. Instead of having to set alarms on TradingView for like volatility events, you can set it for essentially 1% move within 5 minutes. So not bad. Open interest changes. This is pretty popular. Tracking open interest. Talked about it on Casual Fridays before. It's basically, you know, the amount of positions, existing positions in a given instrument is a very crude description. You can see how that, I think, yeah, it's 5% over a certain time period, which you can adjust. And then you can also always compare open interest and price and make certain deductions from there. So that's cool. And then funding payments as well. So again, one of the coolest stuff, developments more recently, mobile app changer, there's some customizability. So again, just check that out on your own if you're interested. If not, well, that's cool as well. Also, the newsletter, Technical Roundup, is getting a full makeover tomorrow. It's going to... Yeah, we're just changing it up. So I hope you find the time to read it. We're going to email it out to everyone who's subscribed, obviously, so go ahead and do that. It'll be a lot less monotonous and more kind of on the fly, and yeah, it's just better. I'm sure you'll agree that it's better, and that comes out tomorrow at 8 p.m. UTC. Final bit before we get into markets. I know it's been 3 minutes, but my video on market structure is out on my personal channel. Just search crypto cred market structure. Hopefully the algorithms are kind enough to to show that in somewhat good ranking in the YouTube search. The funny thing about that video, well, it didn't really feel funny at the time, was I'd recorded the whole thing, stopped the recording, and then realized I wasn't recording, which was always fun. But the second recording, the one you see in the video, is actually a lot better than the first one. So it's not all bad news, right? Had to pay a bit of a premium, like an hour of just talking to myself and my news, in my room, rather, but the final outcome is good. I looked through a lot of market structure content before I made my video, in case I could just outsource it to someone else, if you will. But a lot of it was really bad or really basic, to the point where... Do you ever do this, where you read something and you feel well informed, and then a little bit down the line you realize you didn't actually learn shit? Like you're reading it, you seem to be absorbing what's on the page, but as soon as the video or the article or the book is over, you realize you haven't understood shit. I feel like it was that way with a lot of market structure videos that I watched. So hence why it's long, it's detailed, but you know, a pretty decent foundation. And look, if I didn't think it was worth your time, I wouldn't have made it in the first place. So, right. Let's talk about Bitcoin. Let's talk about ETH, altcoins, all this fun stuff. Make sure to like the video if you haven't already. And yeah, let's talk about things. Evening, SZ. How are you doing? right? So monthly time frame, not much to say. We've essentially run out of, I think, reasonable reference points at this stage, which isn't exactly something to complain about, given it's to the upside, not to the downside. As ever, if we start getting any sort of big, high time frame visible pullbacks towards where the candle bodies are and start putting in something more meaningful, then we can talk about the monthly time frame. But for now, we are well detached from those prices, so we'll have to look at lower time frames to get a sense of perspective. Doesn't mean the levels are bad, doesn't mean they can't be retested, etc., etc. It's just we always like to focus on stuff that matters or stuff that's relevant. I think a similar type of comment can be made regarding the weekly. The one level which was in play, or the couple really, was the all-time highest close at around, what is that, 19.4 or thereabouts, just under 20k. And then from then onwards, I mean, yes, there's this kind of weekly cluster with the lowest close, highest close, but we blasted through that and got a close enough retest here, which I wanted to long but didn't get to long. But look, I think on the weekly, I really don't even want to see a retest, at least in the short term, of this 20k breakout. I think if this is just one of those things that's going to consolidate and go higher, there's no business necessarily of it pulling back so quickly after the breakout, especially with a candle like this on the weekly time frame, right? We have to keep in mind that this is the prevailing weekly theme that we're dealing with. We've had the highest, I suppose, impulsive, whatever, weekly close ever. It closed well away from structure through the level, and so I really want to see that maybe consolidate for a couple of weeks max, sure, but really head north. For me, pullbacks, I mean, yes, it'd be technically a pullback to support, but a candle like this getting retraced in the short term, my mind at least would start flirting with the idea of some sort of failed breakout scenario if we retest that quickly. So I really don't want to see that. I want to see pullbacks contained on lower time frames and this kind of macro stuff, at least for the time being. If this is going to continue north, I personally wouldn't be a huge fan of pullbacks to levels in that type of context. I think we'd see something a bit deeper, especially not because it's just the case of levels. If you've had a break of, resistance, broken, I wanted to keep going as opposed to retesting. There's added context here in the fact that this is the all-time high, right? So a lot of the narrative surrounding Bitcoin is and continues to be, how can you call it the tulip bubble or this, that, etc. If it comes back and doesn't die, right? If there's a constant resurgence, new interest, new narratives, new all-time highs, then clearly bubble analogies aren't as persuasive than they were, down at these lows, as people I'm sure love to remember. So as a result, I think a totally reasonable trade that was on the table in one form or another, although execution-wise not as easy, was basically the all-time high breakout buy, right? So what I don't want to see is that trade idea essentially eat shit, and all those new 20k breakout Bitcoin validation buyers, I think they'll have amongst the weaker hands in the market if we start to pull back, and I think that will have a cascading effect rather than do anything good. So yeah, dip into 20k. TA-wise, yes, broken resistance tend to support, but for me personally, I really just don't want to see it. I don't want to see it. And I think that makes sense. If it isn't, of course. Yeah, Flary, I think I made that point. I think I've answered the question at least the best I could. Yeah, traded back briefly, but I think it's just a different market with different circumstances. I just don't think after a weekly candle like this, it really shouldn't be getting retraced in the short term. There's no real reason to. If the market's really strong, the path of least resistance is up, all through price discovery, through the all-time high, and a significant one at that, as opposed to some of the earlier stuff. I think the market was really quite different at that point. And yeah, that's a good point. It only just closed above that time, whereas here we've completely smashed it. Right, there was no Sailor in 2017. Yeah, Michael says Saint Sailor, as we call him in the newsletter. Just keeping the macro perspective here, I think the 3-day chart, not one I use a lot, but sometimes it just evens out a lot of the noise that can form between the weekly and the daily timeframes. If we take that all-time high close on the 3-day time frame and take it across, you see we had this the chop that we saw on the weekly time frame, which isn't looking so clear. It's just a couple of small candles before that big moon candle. It's a bit clearer on the 3-day structure or time frame, whereby we essentially had this consolidation and then the all-time high break, right? So that consolidation, which formed below the old all-time high, I expect that to, and would want to see that act as support if the market's going to be bullish, healthy, etc., etc. I think you can impose another level close to 17k. I'm not a huge fan. I think you can just use the consolidation in itself, just the lowest close and highest close in the consolidation, and argue that for a high time frame bullish bias or the absence of really big pullbacks towards like meaningful structure, the red box has to hold. And then if red box fails, then we're in for a deeper type of pullback towards, I mean, God knows. I think at that point, kind of your 12, 13Ks, etc. But just to be clear what the points are, 1, market looks good because we've smashed everything. 2, because of 1, I don't want to see an all-time high pullback back to 20K, back to whatever it is, because there should really be no reason to. A lot of the new breakout buyers would be underwater, and it's just not a market that would be screaming strength. It looked like a lot like a trap, and I'll mention that in a moment. So point number 3, purely kind of technical stuff. If we do get a pullback and don't just continue higher, I think the pre-breakout consolidation at around 19K or wherever this red box lands is... I mean, look, there's going to be a lot of, absence of really good structure when the market looks like this. And if you break the one level that is kind of acting as an obstacle, then you come back and fill in a lot of the crap, so to speak. So that barrier for me is wherever this 3-day consolidation lands at kind of 19K or thereabouts, okay? And the reason I'm so reluctant to rebuy the all-time high retest if it comes quickly is basically because of gold. So we saw with gold, and again, this is something mentioned on Friday's session, but nonetheless, you have a clear swing high, all-time high, etc. Very strong close through it that was just primed to go higher. You even, for the technical guys, got your retest here, even though, as I mentioned, I'm just not a fan in those sorts of contexts. When you get the extra context of the all-time high breakout and then getting retested so quickly, I know this is the monthly, so it's not that quick, but for gold, different timescales apply. But this is kind of my fear if we come back quickly as opposed to head north quickly. So this strong-looking all-time high break ended up being the top, and then that's been flipped as resistance so far, and then the market bounced at another decent level. But again, that's just kind of adding to those points made earlier. Everything looks good, so it should continue looking good. And if we start getting your 20K all-time high pullbacks, etc., it's just not screaming strength for me personally. Someone asked about drawing software. I use Lightshot. Correct. Sushi Lover says, "Craig, how come gold can test all-time high and drop below, whereas Bitcoin cannot?" No, well, the point I'm making is I don't want it to test all-time high quickly, or at least in the short term, because I think the buyers, the all-time high breakout buyers, are going to have among the weakest hands in the market. So if we start pulling back towards their entry, I think they'll puke. And just generally, it would suggest that someone's comfortable selling. Some decent size is comfortable selling so close, or so little past new highs, which wouldn't make the strongest case for a prolonged cycle to the upside. Does that make sense to anyone? The whole all-time high breakout retest thing? Like sometimes, I know from a support resistance point of view, it may seem like, oh, well, it was amazing resistance, so why don't we buy support? But you always have to kind of appreciate the context, right? Does it make sense for the market? Who's buying that breakout? Does it make sense for the market to pull back there in that time scale, etc., etc.? Has no business testing it right now. Yeah, that's kind of my view, right? That doesn't mean I'm going to sell into the level if we get back there immediately, but it's just kind of, it would have me a bit like, ugh, come on, really? So give me 1 sec. Let me open a window in here. All right. Yeah, Mum's basement comes with a window now, so that's a good thing. Flary says, so you said not immediately. You think it might come back eventually? I'd be comfortable with it coming back eventually, sort of weeks and weeks after, and whatever in another cycle, but not in this short-term breakout type of thing. Generally, with gut feeling, there have been things which have made me uncomfortable. Like all this news at the same time, like Michael Saylor's average getting to like 16, 17K now, Coinbase IPO, and yeah, I don't know. It's not changing anything. It hasn't affected my positions or my net long exposure via spot right now, etc. But there are just some things where I'm kind of like, ugh, you know, just make you a bit uncomfortable in your stomach. So yeah, that's Bitcoin. Some lower time frame price action stuff. Anyone wondering where that 3-day consolidation falls? Broadly speaking, it's upper boundary. And again, these aren't lines in the sand by any means. It's just an indication. It's between 18.7 and 17.7, more or less, right? You could even use this highest close and this lowest close to get a tighter range of around 18, 19, thereabouts, right? Again, it's an area, you'll remember with 10.7 how much it was violated before ultimately doing its job. But basically, we had a range which we broke out from, however you want to define it, right? An area of prior highs and an area of, God, this one's a bit messy, to the downside. An area of lows. We broke out from that range. The bottom side of it shouldn't fail as support. I mean, even technically, if the market's really bullish, the top side shouldn't fail as support. But any lower lows from a daily market structure point of view, like from big swing points, you had a low, we had a higher low at this point, now we're all the way up, something could develop here. But for example, if this low goes, or something up here develops which breaks market structure, it just wouldn't look too great. But from a high time frame point of view, yeah, I think the 3-day, and as long as we just don't start pulling back to all-time high, I think I'm generally going to stay pretty bullish. In March 2017, Bitcoin broke 2014 all-time high and corrected 30. I'm not saying it should, but the same, yeah. Look, I'm not saying that if it falls below all-time high, that's it, like the cycle's over forever, etc. It's just for this momentum, for this kind of momentum that we've had, either on the weekly time frame or on the 3-day time frame, whatever, for that mode of aggressive continuation, I just don't think it has any business pulling back to the all-time high so soon after breaking it. I think it's a basic argument, and I'd rather look at what applies right now and how the market is developing right now versus making comparisons with 2017, 2014, etc. I just rather trade what's in front of me. I've never been a big fractals guy because it's not the same participants doing business at the same price levels, etc., etc. I think it's worth making a distinction. Now, the intraday timeframes, there have been some, some money lost, if you read Twitter, on this candle here. It didn't really achieve much. I think again, monthly, not huge use to us. Weekly, shouldn't be retesting that all-time highest close at 19 if it's bullish. 3-day, if it does / generally pullback, should hold this consolidation. If not, then I think we'll correct pretty significantly. Daily time frame, not really much going on up here. And again, the 3-day range falls into this daily range. So again, areas we really shouldn't be necessarily seeing, given the path of least resistance is up. The intraday time frame is just chopping a bit, and you know, that's fine. For me, it hasn't really done anything that meaningful yet, which may seem weird to suggest, given, oh my god, big scary candle. But looking at this consolidation here to carve out some levels, highest close acting as resistance or the range high, and then lowest close acting as support or the range low. Range low is supporting, range high is resisting, and that's about it. Not much has really changed beyond that. Broke to the upside, didn't work. Poked below, didn't work either. And now it's back at balance, if you will, if you prefer that type of terminology. Now, from a purely TA, whatever bullshit point of view, obviously I could sit here and say, yeah, if it does this, it's bullish. If it does this, it's bearish. I mean, it's not useful or helpful to anybody. I think what's more useful and helpful is an understanding of current conditions, given we're entering kind of end of the year, public holidays, there's options expiry coming up on Christmas Day, and just generally kind of, usually at least, slower moving and thinner markets. I think it's generally this kind of year's turn is a shitty time to bet big. Like if you want to manage your spot or punt some lower time frame trades from level to level, etc., that's fine. But I'm certainly not going to build any high conviction plays around here, given where we are in the calendar as well. Both from a market point of view, with conditions being thinner, and it takes, as a result, it takes less money to push price around, and especially in a range that can make setting stop losses difficult, etc., etc. So there are market reasons for that, but also personal reasons for that. You won't catch me obsessing over the price chart on Christmas Day, New Year's Eve, etc. So if you've tried to play this and you got stopped out or chopped out a bit and whatever, I wouldn't fret. I honestly wouldn't fret, and I think these conditions aren't hugely conducive towards chasing the next big move, and that's not going to be my focus, at least. And I think that's it for now. Does that make sense? Right how it does? Okay, good. Yeah, I'm glad. So yeah, that's kind of it. I'm not going to rehash all the time frames over again. But hopefully you have a... Too long didn't watch is... I don't want to see pullbacks towards the old all-time high. That's kind of it. If I do, yes, we have levels to deal with, range higher, range low, blah, blah, but I just don't want to see it. That's it. That's the short version. ETH. So I think ETH, in terms of timeframes, ETH monthly is helpful to me, and ETH daily is helpful to me. And the others are sort of kind of less so, although we can talk about them. So on the monthly time frame, just to provide some context to me in terms of where we are, we've essentially moved from one side of the range to the other, right? So we've had lowest close, which famously chopped me up. I got long on the flip, basically, on this candle, ate shit, and then didn't manage to get long on the other side of it. It happens, c'est la vie, etc. But now it's reached the other side of that boundary at the highest close at 670, whatever it is. So again, lowest close support, highest close resistance. This was kind of the admittedly small range before the cycle lows, whatever, higher low, etc., etc. And that's kind of my reference point for where we are now, especially given the weekly levels and historical levels aren't so clear here, although better than we have for Bitcoin, I suppose. So yeah, for me, 700 is the top of the range, at least. Technically resistance, and for me, at least in my system, whenever we move from like one side of the range to the other, one range boundary to the next, my bias will typically be neutral, and I'll chill and wait to see the continuation through that range high or some sort of price action at the midpoint to indicate shorter term bias. So that's kind of just some monthly context. The daily has a bit more useful information for me. Edge of Insanity says, are you always trading the higher time frames, or do you also intraday? I also trade intraday, but most intraday trades are based on either the higher time frame levels or just the higher time frame picture. So there's always a higher time frame logic to the trade, but it does also occur on an intraday basis, like hourly, even 15-minute stuff, etc., etc. So I think this is one of those cases where market structure is helpful. Surprise, surprise. Maybe it's just my brain being biased, given the video recently. But we've had, high, and these are big swing points, right? These are fairly unambiguous. High, low, I mean, technically higher high on the closing and also on a whatever basis. So, I mean, we'll give it that. Higher high, higher low. I mean, yes, there was a short-term break in market structure here, which we talked about, but I'm talking the really big swing points. And now we've made another higher high, right? So, logically, the question to ask is, what's the next reasonable candidate for a higher low? And I think more or less two levels come out to it. One is some sort of messy retest of where the last couple of highs formed. Again, it's not always going to be super neat in terms of levels. We had a bit of pokage through it on the way up. You could even just be a bit more generous and, give it this candle, for example, as a whole, as opposed to, make an area out of it, which is totally reasonable. So this is a decent higher low candidate. But anything really, even this kind of pre-breakout consolidation is also fine if you wanted to add it sort of here. But I think that generally, as long as this sequence of higher highs and higher lows, as long as that isn't broken, which would require some sort of bounce from either of those levels, so here-ish, be it at the range high or at the pre-breakout consolidation. As long as that happens, that's fine. What I don't want to see is basically this swing low break, which would be big red flag, or medium red flag is obviously support in one of the ways we delineate breaking. Given the trend, etc., obviously I have to presume continuation is more likely than reversal. The only thing which makes me slightly less certain is the fact that we haven't just reached anything, we reached monthly resistance, and that's what we are reacting from. Again, I'm not going to express terribly strong views in terms of short-term positioning, punting, etc., given I expect Christmas week to just be a bit lackluster and thinner, and I just know personally, for a fact, I'm not going to be taking on any positions, if not, well, any big positions, if not any at all. I haven't really decided yet. So, you know, if I'm not trading this with any conviction, I'm not going to offer you views with with any conviction either. That'd be a bit of waste of everyone's time. But just to provide some context, market structure is bullish. We're retesting an area which has reasonable candidates for some sort of bounce. And as long as those higher low candidates hold, I think things are fine, and we'll probably retest that overhead monthly resistance as well. If the market's going to show weakness, then that would come in the form of early sign would be support breaking and a failure to establish at higher lows a higher low where it really should, and then the slower moving but more explicit or overt signal would be a break of the previous swing low here, which would be a more significant break in market structure. Because at that point, you've had high, low, higher high, higher low, higher high. Well, where's the higher low? Oh god, you've made a lower low. Fuck. I mean, you're either chopping or you've reversed the trend. It's not really bullish in any sense, for me at least. So yeah, support. Best candidates for a bounce around here. If it fails, ugh. If it makes a lower low, definitely ugh. And downside targets for that would most likely be the origin of the breakout closer to 500. So kind of up here, which is also confluent with the higher low that came before that. Does that make sense? Again, I'm always going to assume trend continuation until proven otherwise. I just like to know where I'm wrong and scout out in advance those areas where I'd expect buyers to step in. Okay, that seems to be reasonably clear. ETH BTC is... Look... It's not easy, right? Like on the weekly time frame, it is the case that the best level on the chart has just eaten shit, right? Straight up, the 10k equivalent, the biggest swing point, acting as support, etc. We had a weekly close below that, and that was following a bearish retest at this level here, which we also talked about on the live stream as being a potential bearish retest. I think we had it as an area, right? So then you've had, in terms of short-term market structure, right, you've got this high here, support broken, then you've got a lower high formed at this point as well, and then this close is pretty ugly. So, I mean, lower low relative to the most recent swing point, this over here. But again, I think for me, the overriding context here is the level. The origin, not the origin, basically this weekly market structure level acted as support previously, and the most it could do was lead to a bearish retest. Now it's closed below the level as well. So that's rough, right? That weekly close is kind of shitty. It's kind of, you know, lower high, break support, not looking great. The so-called good news is that if you have stricter criteria for market structure, right, it still doesn't look terrible, because you could make a case for this simply being a deeper retrace into here. So I know not everyone's a huge fan of this level, but if we take the kind of, you know, if you take a view that this was a high, then this bit of price action was a lower high, and this was the higher high, then the question is, where is the higher low going to be? Well, your support resistance flip will have to come in closer to these levels here, right? And even if we measure that from basically moving from this low to this high here, like how much of that leg can we reasonably retrace? If I just move from candle body to candle body, that whole kind of 618 crap, golden fib, whatever, lands around that same type of area. So it's one of those things where the best level has just eaten shit. But from a market structure point of view, most of the move, like you'd feel pretty uncomfortable, I think, or at least I would feel pretty uncomfortable being overtly bearish into this kind of area, right? Well, however you want to define it, it's just there feels something fundamentally wrong, for lack of a better term, for choosing this, these breakout levels to be the point where you think, okay, that's it, fuck it, Ethereum's bearish, ETH BTC is bearish, send it to zero. Okay, so it kind of depends on your priorities, right? From a weekly time frame point of view, looks like shit. From daily and other time frames, could still be a decently, just an uncomfortably deep pullback, so to speak. What's my personal view? I don't have a fucking clue. My personal view is that the weekly time frame looks like shit, but it's not actionable because we're so close to daily support. And that's just sometimes how markets are. Like, you can have a directional view, like, oh, this looks great and this looks shit. But then once you add some meat to the bones, that view in its own isn't always actionable, because it could just be too close to resistance if it's, most of the bullishness has already played out, or most of the bearishness has already played out, probabilistically at least. And that's kind of where ETH BTC is for me. The weekly looks like a piece of shit, but I simply can't get bearish into this area. It just doesn't make sense for my system. And even in the short term, we could be making an argument for a shorter term kind of low over-under type of pattern with, low, lower low, makes a higher high, and then pulls back to the original low. So all sorts of kind of bullish warning signs, flags are coming up here, and I just think it's a shit area to get bearish, even though the weekly time frame is leaning that way. Does that make sense? Do you see what I'm saying? Like, yeah, weekly, closed below support, send it to zero. And then you look at the daily, it's like, this is probably the worst place on the chart to get bearish. So you just think, fuck it. Context is everything. Yeah, man. It's something worth asking yourself if you're trying to either build a trade idea or just a directional view. Like, it's not enough to say, like, I'm bullish or I'm bearish. You got to kind of ask, how much space have I got to capture on my bullish or bearish view with what the market's offering right now? My view, my view is that this is a shitty place to get bearish despite the weekly time frame, but thankfully I don't need to have a strong view with regard to ETH BTC, because I can just pay attention to ETH USD and BTC USD, which are a bit clearer to me. And look, sometimes that'll be the reality of it. As much as I'd like to sit here and say super bullish, super bearish, up, down, markets can just give you a lot of gray sometimes. You have to do your best to navigate through it. Crypto Strategist says, what do you think about the Bitcoin 30% retrace meme? Can we expect something similar to the previous cycle where all the majors dip on Bitcoin bull run were somewhat equal percentage-wise? To be honest with you, I think the Bitcoin 30% retrace meme fucked a lot of people, and as a result of that type of psychological conditioning, caught them with their pants down at a time where they should have been enjoying the upside that came with the market. Especially given how kind of clean the overwhelming majority of the trend was. Having this bogeyman in the back of your mind of, oh my god, any day I can just wake up and the market's down 30%, I think led to a lot of over-eager trade management for a shit ton of participants. So what do I think of the meme? I don't really love the narrative. I think one of the benefits of a level-to-level approach, even if it's high time frame level to level, which means you can still swing trade and look for big moves, I think the benefit of doing so is that you can essentially forget and ignore those types of narratives and say, yeah, well, support broke, so I'll just see what the market does until it reaches the next level, or vice versa. What you'll see a lot in kind of trading, psychology, whatever, is, let's say the market's, let's do this really quickly. Go away. Okay, so I'm sure you've done this, because I've done this as well, right? So let's say the market's up here, right? You are here. And then you're really bullish. And so you're saying, while the market's up here, that, oh, mate, we've built an amazing level of support at red. If we get there, I swear to God, I'm mortgaging the house. Or even they say, oh, well, I wish I bought that red level flip, because look where the market is now. And then as the market makes its way towards that level, when price gets here, instead of being excited, saying, okay, now it's time to do business, red level, let's party, as price gets closer to target, people will just naturally kind of move their target away. So the market gets to this point, the level they were going to mortgage the house to buy, and they kind of move it down and think, yeah, it's moving kind of quickly, funding this, open interest that, maybe this is the level where I think, maybe I'll even short this level to get it to the next one, but, this is the one where I really want to buy. And obviously what happens is either straight away reverses without them, or gives them a bit of false hope into shorting, and then penta moons without them. It's this really weird thing that as the markets move towards people's targets, they move them away, and then vice versa as well. I want to sell this level, and then as the market moves towards it, those orders either get pulled or put higher. It's like, do you even want to trade? Are you just avoiding getting in the market, which is a whole different thing? So look, yeah, for the 30% retrace meme, I don't think all the major dips on the Bitcoin bull run are going to be equal percentage-wise. I think that's something that was even recognized after the fact. Like in 2017, very few people, when the market was correcting 30%, were actually looking back and saying, well, look, the last couple times we did this, the market was bullish. I mean, you had a few people saying that, but every dip was treated as unique. So there's a good chance we do the same thing. And generally, to be completely honest, I'm pretty trash at fractals, and I don't give them much weight either, that this market corrected this much, or look what we did in this week of this month, etc. Which I know is a hilarious thing to say as someone who trades technicals, but nonetheless, I don't think I have an edge, or my system doesn't give any weight towards fractals in that sense. So I think trying to predict where every single correction is going to land magically in terms of percentage terms is just not a useful endeavor. I think plan your levels in advance, know how you want to trade them and in what direction, and then take it one level at a time, in my opinion, is kind of my approach, rather than see one support break and think, oh my god, it's all over, and expect much bigger moves than the market offers. I'm going to take what's on the table, and I'm not going to extend myself beyond that, Does that make sense? Does that kind of answer your question? I know it was a bit long. I agree that journaling helps against this. Charting and trading totally different, absolutely. I remember you'd post on Twitter, the best level is the level you don't want to buy anymore, not where you really want to go in. Yeah, that specifically is like an entry strategy thing. So if I have a level, a lot of the time it works this way. I have a level that I really want to buy. I'm like, I'm that guy, right? Like the market's here, and I'm thinking I really want to buy the red level if we get there. And then the market comes into it, and I'm like, it's not looking so great. Like, it's kind of spending a bit long here, and some bigger sellers are coming in. And then when the candle literally looks like it's about to nuke the level, right? Even before it's closed, and it just literally looks like a pile of shit, I almost force myself to buy that. And then a lot of the time that ends up being below or close to it. So even if it doesn't travel particularly far, a good entry usually leads to better management, especially if your sizing is decent. So buying a level, it's to do with like buy the level that you planned to buy, but when you least want to buy it. So like this is support, right? This is support, but I'll buy it when it's looking least like support. So it's like, oh my god, it's about to roll over. It's like, you usually does some stupid shit like this on lower time frames, at least, You kind of got to counter trade your emotions. Like if you read my DMs with Donald, I have a level of support, and I'm like, I'm bullish here. And then I'll DM him being like, oh my god, this thing's about to roll over. And then I'll buy as soon as I catch myself doing that bullshit where I basically assume support's going to break before it does. And it's a level I plan to buy in advance. It's like my best entry signal. Counter trading my own DMs with the duck. But yeah, that's a good thing. I think I used to not subscribe to the idea that a lot of good entries are uncomfortable. But the more I think about it, at least in my own personal trading experience, a lot of fantastic entries tend to be uncomfortable. Like if you want fantastic entries, they'll often be quite uncomfortable. Because again, there's generally a risk spectrum trade-off between kind of the quality of your entry and then the amount of confirmation you get, right? So if you want better entries, you're going to need less confirmation. But if you want more confirmation that price is going to do X, Y, Z as support resistance, you usually have to pay for that in the form of a worse entry. Which is why if you want like the most fantastic entries usually come with the least amount of confirmation. Often at the cusp of being wrong, right? Being wrong, right? But yeah. I agree. Flary Reuter. It gives you extra room to work with. Even if the idea is proved wrong, you'll have much more time, room to manage it, and if not, yeah, for sure. That's one of the benefits of entering where you know you're wrong. It's not just a risk reward calculation. It also affects trade management a lot. So yeah, bit of a tangent there, but I suppose that's what these live streams are for. The TLDR for ETH BTC is that the weekly chart looks shit, but I think on the daily this is one of the worst places to become a bear, so to speak. Link USDT hasn't really done much, at least not for me. I know someone had this channel. Was it the duck? I don't know. There was some diagonal stuff going on, which purported to break. I don't even know if I've drawn it correctly. I'm sure you can find it on others' Twitter feeds. For me personally, if we just quickly overlay the levels that I find interesting, derived from the weekly time frame, this has just kind of been on the choppier, head and shoulders-y side. Nothing too strong at the moment. What's this? Oh, Binance having issues. Fantastic. So yeah, Link, I think just watch the duck. He's much more in tune with Link. But on the USD pair, certainly compared to past price action, well, you know, in the context of the preceding run, we're in a much choppier phase than we are a trending phase. Link BTC is the one that's been clearer. One of the better things from the newsletter was the support resistance flip at this level, which was pretty big, and our target was the weekly range high, which is in sight now. Look, strong views for Link, for me, will come from a reclaim of the broken range low on the weekly, or when/if price reaches this macro breakout range high. This, for me, is almost the end of the leg. And it's one of those things where, again, as discussed earlier, even if you are bearish, it's like realistically, how much space is there left until support is reached? And then can you clearly define risk to even capture that small portion? Or is it worth chasing? In this case, it isn't. I'd much rather wait for the range high and then make some sort of informed decision or take another look, at least based on the weekly time frame. Generally, I think there's a decent chance of at least a short-term bounce play from the top of this range, just given how significant it is technically and the nature of this retest, etc. But it's one of those see it how it, you know, look at it when it gets there sort of scenarios. If we have to look forward a little bit, if the top of the range fails, that would suck, right? That would really just look like Link's put in a large market cycle top here, and I'd just literally expect the other side of this to be filled out if the top of the range fails. I mean, that in itself, just from support to resistance or from broken resistance to support, there's another 30% there, should that be the case. But yeah, general expectation, I'm going to not position here because it's just too close to support. Let it reach this level, see if there's a bounce play. If not, and or if the weekly closes back within the range, I think it'll just keep going, honestly, with the first objective being another 30% haircut. These things haven't really done a lot. YFI has kept chopping. This is classic breakout attempt structure going on here, but really just moving sideways, not much to read into it. Honestly, it's like okay, but the general idea, as you'll recall, was the range low reclaim into the range high, right, from A to B, especially given how strongly this is moving up. Hooked here, you got a nice whatever reversal candle, whatever that means. You know, what more do you need at that point for the bullish side? You kind of you have it awarded to you on a platter, and it's just kind of been meh since then. Thing is, it's made a decent job of this level now because we've had downside and upside touches to it. So if the market just starts to peter out, or if DeFi takes a beating, or I suppose Bitcoin volatility washes alts, whatever it may be, I think there'll be a decent opportunity on the downside from this level, which is still good, right? Even if it's not leading exactly where we want it to, the level's still doing its job quite nicely. If I get a flip there, I don't mind selling it down to 15s, which may seem like a massive target. I mean, there's a good chance I'd manage it at this trouble area here, but again, not married to either side of the market. I think support has been given ample opportunity to do its job. It should bloody well do so, and if it doesn't, I'll take the other side with comfort. Litecoin, someone asked. We can take a look at Litecoin. So the duck knows that I think I hate the Bitcoin pair. I just find it very frustrating on the daily time frame to make sense of and to interpret. The weekly is a bit better, so that's kind of what we're going to focus on. We will look at Aave as well. So the weekly looks decent, right? The weekly looks decent. And this is something we'll write about tomorrow in terms of other fundamental stuff, whatever that means. But purely, I mean, look, I'm just being consistent. I've argued previously that if it reclaims this on a weekly basis, there's space to go from one level to the next here on the Bitcoin pair. And it seems to be doing that, right? This is pretty strong close and retest. So it pretty much can't go much lower than it is now. I mean, this consolidation as a whole, arguably, but I'd rather let the level hold. And so I'd like to see a retest as it's doing right now during the course of this week. And unless it does a Litecoin, which is basically bullish candle, then just chop, retrace, does nothing. Seeing strength at this level during the course of this week, I'd be comfortable expecting outperformance in Bitcoin relative to Litecoin. At least a range-to-range play, right? Support, support, broken, resistance, resistance. Maybe finally a bullish support resistance flip on Litecoin. And then again, I'll happily trade both sides of that market. Maybe via Litecoin dollar as opposed to the Bitcoin pair itself. But yeah, that would be good for me. These are the two levels I care about. As long as it doesn't take a shit here during the week, I'd expect the top of the range to get tested. And we can see what Litecoin dollar is doing to complement that. There was one time frame I knew I was monitoring. Yeah, I mean, you've had the weekly breakout now. If we look at the so-called obvious swing points. We've had this, which is good. That's really the main level for me. I don't see it. I'm not a huge fan of. I mean, we could just use delineative market structure here. I don't think there's anything hugely compelling in between, so to speak. I mean, potentially this low here. Potentially, but I feel like I'm curve fitting a bit. You know, I could just look where the market is and kind of work backwards. It's not like an amazing level per se because of this. Yeah, no strong views on Litecoin dollar. I think generally, like, if you're trading in a strong trend, breakout should be expected to hold, right? Like, I know everyone's used to, you know, break resistance, breakout, and then, oh, it's a deviation, it's a trap, stop here and short it to zero, etc. But that assumes ranging conditions, right? That anything that takes place above the range high or below the range low is some sort of excess. But in trending conditions, that shit just doesn't apply. If the market breaks out, you just expect it to keep going and to keep going higher. So those trend, you know, if you have an understandable skepticism towards ranging instruments or price breaking out or breaking down from a range in ranging conditions, that's fine. That skepticism is definitely warranted because you're assuming that one side is going to get stitched up, trapped, etc. But if you're trending, then there sort of shouldn't be any type of stitch up, trap, etc. unless we get to really excessive parts of the trend, blow off top, this, that, etc. So following on from that, to be completely honest, like the breakout level, these highs here, the extremes, 90, look, someone in the chat even said, I think Noah, 93, he says, yeah, more or less, right? Wherever this lands, that should hold. And, you know, if it retests, fine, that's kind of enough, but it shouldn't really even be doing that. As long as there are no closes back below where it broke out from, just going to assume continuation because I'm not hugely fond of structure all the way up here. So Litecoin, Bitcoin, good as long as it doesn't shit the bed during the course of this week. Litecoin dollar, as long as it doesn't retrace the breakout, also would be in a good position. Yeah. I think we can take a look at some of the DeFi stuff. And as always, if you have any just trading related questions or anything about what we've covered, let me know. Rune, still stuck at the same level we had previously. A lot of the DeFi stuff was kind of taking a chill pill after entering price discovery type of structures. I'm still open-minded and not on a limit order, whatever basis, but playing bounces from support. I mean, this range is held up quite well on the top side. So unless the whole market gets rug pulled, I'm generally open-minded generally open-minded towards bounce plays from the bottom side of the range as well, which for at least here falls on 0.016, 0.017, right? This daily cluster here. But for now, I wouldn't wait for a breakout quite yet. Rune is meh, right? Similar type of. We can even add this high here now that it seems to be doing its job. Yeah. Again, you need to be reasonably aware of what kind of conditions we're in. Like if it's trending, then a lot of trading is done at the breakout or after the breakout. If it's ranging, we have more patience to wait for the levels themselves. So in this case, again, if the top of the range is doing its job, then I'm open-minded towards bounce plays at the bottom of the range. But this might get a bit tricky given there's also support reasonably close below it at 70 cents. I mean, that's actually, fuck it, that's 10%. It's not reasonably below it. That's wrong. So range, resistance up here, doing its job. Support down here hasn't been tested. I'm going to assume this continues and will prove otherwise. So I'm open-minded for bounce plays at the range low. But I think with DeFi stuff generally, the technicals work really well when it's... I mean, when it's ranging, yes, but you really want to be on top of the strong trending days and periods in these when they're up like 5-7% every single day. Turning these into super technical mini, e-mini contracts to trade every single level, I'm not terribly fond of that idea. So I'd much rather pay more attention to these when they're in strongly trending environments rather than trying to knife catch one boundary to hope it takes me to the next during the course of the week. So again, it's rather these sorts of legs that I think perform well on DeFi pairs rather than turning into, slowly eroding your account balance in those sorts of conditions. CRV, curve, yeah, just no. Kind of annoyed. Not annoyed, it's unfortunate this level is now acting as resistance. And I don't really have a ton that inspires confidence near these lows. I mean, potentially, literally this, but I'm not even going to add it to the chart because it's not so great. I'll have to wait for this to do something. Because look, even if for those of you who watch the market structure video, this is a good example, right? So you have the market structure break when either this high or this high, whatever, this level gets taken out, right? You've got a high, then you get a strong breakout through it. That's your higher high. So then the question is, where's the higher low going to come in if the market's bullish, right? If we get any type of pullback, is it going to be on the support resistance flip at the level, or is it going to be on some sort of higher low candidate on a deeper retrace? So this should look familiar for those who watch the video, and if not, it's on my channel. It'll be helpful. If we take option 1, the support resistance flip, right, it just hasn't done its job. Broke below it, made a lower high relative to the last one. Now it's acting as resistance. So for the SR, that it doesn't do well. Fail. Then the question is, do we have a decent higher low candidate on a deeper retrace, so somewhere around here, just eyeballing it, before making another higher high? And just given the price history of this thing, there's nothing in that area that entices me to come up with a higher low candidate. For a lot of instruments, a lot of price action, you'll usually see something decent formed, but here, just given how it bottomed out, there's no real area that I think, yeah, this should get tested for higher low, it'd look incredible. It just isn't there, right? Not for me, at least. Even if we measure it out and then eyeball that area that we come up with, either the 618, I mean, ironically enough, that's where the bounce is coming in now. But generally, I just don't see much structure within here that would give me conviction, Boss, what do you think of the news in the UK about new COVID? It's tiresome. It's such a shitty way to send off the new year, or send off this year. But there doesn't seem to be evidence, from my understanding, that it would somehow affect the current vaccines for COVID in its original form, so to speak. So I think it's warrants caution, etc., etc. But as for effect broad markets and crypto, I tried to play some of the narrative game with COVID this year and kind of price action heading into the new year. It didn't work, and it's never worked for me. And just these aren't markets that care, so to speak. And once they do, you're probably too late to act on it a lot of the time. So if I know for a fact, which I do, that I don't have a strong edge in these narratives, certainly when they're detached from the technical picture that's in front of me, I'm not going to tell you stuff that I find unconvincing, so to speak. So yeah, in terms of its effect on markets, I mean, fuck knows. I'll trade one level to the next and see what's up. Yeah, that's, and I think it would. I don't think it would change any of my technical conclusions either for the time being. You know, sushi. Yeah, I think this is one of those where that kind of the more basic, the better. That this has kind of been a strong. I mean, arguably you've got 3 drives here and then goes to 0. I'm being hyperbolic, obviously. Don't take that seriously. But I think the general principle of, you know, bull market breakouts should just hold, right? This is a good example. You have this deep swing, right? And this is the kind of, I think this was some Thanksgiving price action when Bitcoin dumped as well around here. You get the breakout and it just doesn't come back, right? So this is what I mean. You got a level, resistance, market breaks it, it just consolidates and then goes higher. There's no retest, and certainly no retest in the short term, right? Which will happen here. You got the breakout, market moved sideways, and then it moved higher. At least on the big breakouts. So in terms of where it is right now, this area to the left just isn't my favorite to navigate. I know Donald's got some badass level made of, I think is it something like this? It might be this. It might be this. And I think that sushi is also going to be in the newsletter. We're going to be rotating a lot of the coins we follow. So stuff that's hot, you know, no fixed list. It's going to be really good. But anyway, I think he's got something like this. I'm generally inclined to agree. And the point that I was making in an overly verbose manner, as always, was that simple stuff works. If bull trend breakouts should hold, this whole deviation back inside the range, higher low, etc. crap should be the exception, not the rule. So for the most part, I see this at support, and if this is a healthy trend continuation type of level, I expect it to hold. Okay, if that fails, and again, if Bitcoin sneezes or DeFi takes a shit, whatever, I wouldn't be, for example, I wouldn't be knife catching this support. I mean, maybe it enters a range, but really at that point, this is the level to hold. If it doesn't, that says enough for me that conditions have shifted around this level of resistance. I'm probably going to chill the fuck out and maybe go fishing lower down. But yeah, at support, simple enough. If it doesn't hold, I wouldn't be the type of guy who says, okay, well, that level broke, I'm going to bid this one, this one, this one, this one, this one, etc. Do this. This is the easiest level. If strong trends tend to trade reasonably easily, so no excuses. And that lands at around, what is it? 2.3, 2.4. No changes on band. Same for SNX. Not a huge. I mean, it's broken out recently, actually. That's not true. That's not true. So here are a couple levels for synthetics. Immediate resistance, highest close here, and then you've got the breakout level at $5.50. Same thing. If it's a strong trend, if it's going to do its job and give you easy enough trades, the breakout level at 5.5 should hold. Your technical first trouble area is 6.2, but then again, strong trend, you expect support to hold and resistance to break, right? So you expect support to hold, resistance to break, and then at that point, kind of price discovery type of thing. I think same rules apply. If 5.5 fails, and I also think this cluster generally has created a nice new invalidation area. If that fails, I wouldn't be the type of guy who then tries to buy, you know, this dip, this dip, this dip, this dip, etc. I think that's your trend continuation bread and butter. If that fails, you just pay attention to something else. Aave is kind of the same, with the exception that it really likes to stitch up at levels. It did so on this Thanksgiving dump here, where it kind of broke down, looked like a bearish retest. I mean, look, this isn't a real breakdown, right? Especially if you look at how low it went on this Thanksgiving candle, there's no way you're chasing that, right? But it does like to poke below, unlike a lot of these. So poked below, resolved bullishly, poked below, and is kind of resolving bullishly at the moment, right? So you've got a bit of a range in Aave. Support, despite the deviation, still at 79 odd, just under $80, and then resistance is just the one at the top of the range at 90 odd. And I do genuinely think, maybe with just the exception of slightly wider stop placement or positioning, maybe we can even include, yeah, this, maybe. I think the same type of rules apply. You've got your trend continuation support. If that fails, then forget it. The whole knife catching thing, here, every single level, not attractive. I'll always look to take the easiest trade on the table, the one that I'd expect the most participants to see if the market's trending very bullishly and looks strong. And if that's off the table, then I'm not going to try to be a genius, so to speak. So you can see with a lot of these DeFi pairs, they're like near/at support, right? So with RSR, I mean, that's a bit further from the range. Sushi looks like a retest of support. SNX hasn't got support exactly far away, kind of $5.50. Are they expecting just under 80 buyers to step in if they want it? Uni is still finding resistance at around $4. So that's a slightly different story, right? And then YFI we talked about. I think we'll republish the article that I wrote on trading a strong trend and some of the different rules and exceptions that come around as a result. But generally, just to be aware, and the reason I'm so insistent on those trades is when you get breakouts, right? When you get breakouts, you expect them to hold as the first thing. So as a result, point number 2, if in a strong trend, the breakout level fails, I mean, yes, it could make a higher low and ultimately be bullish and all that crap, but that's not what a good and, you know, the better trades are. So I immediately lose interest if shit like that happens. And the third point I make is you kind of have to get comfortable in trading in the post-breakout consolidations, especially when you're strongly trending and not ranging anymore. So you've got a level, and let's say that's your resistance, for example, and then it breaks, right, and closes above. The natural instinct is to wait for the retest here, but the market won't always give it to you, right? And a lot of the time, it will actually give you very clean price action in some sort of range that follows the impulsive move. So instead of looking like this, where you get a break, retest, and then that, it actually looks like break, close above, actually forms a really nice range for you to trade sideways, and then breaks higher as well. Except what happens to a lot of people is they end up tunnel visioning. So as soon as you get that close, they think, okay, well, the retest or nothing. As soon as they get the close, retest or nothing. Whereas you probably know enough about price action to take some decent trades within the post-breakout consolidation as opposed to only back at the level itself. Do you know what I mean? Does that make sense? I don't have much to say for EOS. I think the Duck has some views for EOS. I personally don't. The Bitcoin pair looks abysmal for the time being, if memory serves correctly. Yeah, there's not much going on. Oh, and XRP. I think we'll finish off on XRP. Also, if you've learned a single thing or found any of this useful, be sure to like the video. If you haven't already, we'd be very grateful for that. Wait, this is the wrong feed, isn't it? No, it's not. No, it's fine. Let's look at XRP Btc first. This for me just the level that I wanted it to bounce at didn't do shit. So as a result, even if it starts reaching okay levels, I'm going to be far less open-minded on the BTC pair. So if you look at the pattern we had this high, lower low into a higher high. So you'd normally expect, again for the market structure video, that area which made the first high before the lower low to act as support. Anyone recognize this from the market structure video? A quick yes or no would be helpful. Long story short, it didn't quite do that. If we boxed out again, being generous, not just using the high, the whole consolidation that formed around this big swing point, it basically engulfed and closed through it. So that the Spark token airdrop, whatever selling, smashed that level. So even if it bounces from, say, here, which would be reasonable and not totally unforeseeable, I expect rally from that level, if we get one, to find resistance around 2600. So for me, the bullish picture, the easiest route or kind of the deepest pullback would be a flip of this level here to create that market structure pattern. It failed, so my directional bias, I'm really going to struggle to be bullish as a result. And generally, I don't like knife catching XRP because it does this shit a lot, where you get a huge moon candle and then it just bleeds out forever. So momentum continuation is, I think I'd much rather see momentum continuation and buy up and pay up for an entry rather than try to knife catch a slow bleed, you know? Thank you, Simon. I'm glad you enjoyed the market structure video. Yeah, as for the USD pair, I think the nicer levels are away from market, and this range is probably where you lose your money. That's kind of my view there. So even just eyeballing this, I mean, where are the nicer levels? There's kind of two areas. One is the breakout. 40 odd, right? How you want to define this area here. and then the next one is significantly lower, close to 30 cents. So I think trading within this range sucks. Potentially decent-ish entries towards the lower boundary, and then higher time frame support close to 30 cents. Look, I don't love this chart. The more I look at it, at support now, I just don't have a good trading history with XRP. So take my views with a whole bag of salt. Yeah. I think it's a shitty place potentially to get bearish on the USD pair. The BTC pair looks kind of shit to me. I mean, it looked bounced in the short term, but given what it closed below, I'm not terribly keen on it. This is in an area of support, but if that lower boundary were to fail, I'd be getting the fuck out, because I'd expect most of this move to then get retraced into structure. Okay. As for shorter term trading, I'm just looking at this thing on the daily time frame. Probably not going to have a lot of fun looking at the thing of it, looking at the state of it. Okay, was that helpful? Does that make sense? Did you see what the kind of stuff I'm looking for? Hopefully it did. We're almost at 100 likes for the video. That would be a fantastic target to meet if you've picked up anything useful. And of course, if you have any questions in the meantime, let me know and I'll try to get to them. Hi, Alex. For Bitcoin, I said everything looks fine as long as we don't pull back and retest the old all-time high. I wouldn't be a fan of that because I think the breakout, all-time high breakout buyers are going to have weak hands. So if we start pulling back towards the entry so quickly, I just wouldn't see that as a sign of health. When face reveal, I've revealed my face a million times. Just go look on Twitter if you're interested for whatever reason. Merry Christmas, Ray. Flurry Royd, I don't know why I called you Ray. Sorry, mate. Merry Christmas to you. I think generally, if the market enters... Merry Christmas, Alex. If the market enters this period where, again, assuming no gold, fractal, pullback, piece of shit, whatever, if we just keep going higher, the chances that I can outperform a buy and hold just for Bitcoin or against Bitcoin, I just don't fancy it. So I think I'll shift my focus towards either altcoins or just anything else, or taking really... Just like intraday trading only with a reduced position size, because if we start melting up, then, you know, why would I risk my Bitcoin or fiat or whatever in potentially getting stopped out of a long, or even trying to short when I could just hold the damn thing and, yeah, you know what I mean? Yeah, we did just talk about XRP, we looked at CRV, so make sure to look back in the stream and check those out. That's all I've got for this Christmas edition. First of all, thank you again to Bybit for sponsoring Technical Roundup. I do think the updates pushed to their app are actually pretty cool. If I didn't think so, I wouldn't tell you. I don't have to say it. So be sure to check those out. Like the video if you haven't already, and subscribe to the channel. Your support is very much appreciated. We love having you to hang out every Monday, Wednesday, Friday. Watch my video on market structure on the Cred channel. It'll just make a lot of sense, and I think it's a good video. I did compare it to a lot of other market structure videos, and I think it's better than... most? Am I allowed to say that? I think so at this point. And lastly, a Merry Christmas and very happy holiday season to you and your loved ones. Look after each other, cherish each other's company. All of this is ultimately meaningless if we don't have good people to share it with. So take care. I will see you on Casual Friday and in written form via the newsletter tomorrow. That's all I've got. Take care.